continue to endure multiple impacts of the changing economic landscape, CFOs must support CEOs and cross-functional leaders in driving business recovery and addressing the continued uncertainty. Hence, now is the time to revisit organizational and cost structures, identifying opportunities to streamline, cut costs, and protect the business. Our final discussion of the day on impacting working capital via spend management is a discussion on optimizing the working capital and the technologies to transform. I'd like to welcome Mr. Bradley Wentzel, who's the Chief Financial Officer of Douglasdale Dairy, Mr. Yahia Kafi, who's the Chief CFO of 𝗬𝗺𝗺𝗃 Jameel Enterprises, Mr. Adeel Akbar, CFO of United Food Companies, Mr. Mark Oguh, CFO of Titan Trust Bank, and Mr. Sherif El-Zeiny, who's the VP and CFO of ELsewedy Electricity. Over to you, Brad, for you to moderate the discussion.
Hello all, welcome to today's panel discussion. We've got 5 really esteemed and well-known people in the CFO Africa and UAE areas. Today we'll be talking about impacting working capital via spend management. CFOs wear many different hats, and one of them being cost containment. So we've got a few questions as to how we'd like to chat on this today. The first one is, how has the recent world dynamics impacted your budget planning? What are the steps you have taken to make your business more resilient in the face of continued challenges? Is there any one of us that would like to open up with that? I know yes. Sherif had something to say on it yesterday.
Yes, thank you for this interview and having us all with in this conference. I'm just giving El-Sewedy Electric. We are responsible for 15,000 plus headcount. We are El-Sewedy Electric producing, manufacturing, contracting, and we are all our productions coming from cables, industry, transformers, accessories, meters, too many products, and we have a heavy industrial citadel in Egypt and in another about factories in 15 countries, and we are working in about above 70 countries. So let's talk about what we are, the big challenge and the dynamics we are facing now. Shortage of raw material supplies, while we have, as I said, 15,000 overhead plus other things that it should be covered, and if we will not be able to cover this their cost, it will be a disaster. If any shortage happens in the commodities, the factories will stop. At the same time, in Egypt, we had in April, end of March, devaluation for our currency. So having sales, and I'm selling about 50% of my products inside Egypt. So we were contracting with and having debt in dollar, while the proceeds will be in Egypt and the Egyptian pound, and the Egyptian pound already devaluated. So we were expecting a huge loss by that time. So all this, so we made, for example, enhancement to the pile up to the inventory, to at least to save us for the next 2-3 months, just to till we see what's going on. We changed our pricing system based on the change we are having. We reduced we tried to make always the dollar position long, means what I have in the receivables more than what debt I have. So any debt or bank debt I give to orders from which I will export, which their proceeds are in dollar, while in Egypt sales, all the loans and everything I counted on the government to avail the dollar to us through LCs. So there are too many dynamics. We have to think about it. We have to be very close to what's going on. SG&A should be decreased as much as we can to maintain our GP, because as well the contracts or the contracting started worldwide to be also the margin to decrease because of the competition and the minority of it's not like before the available projects worldwide in the market. So you have to take care of your net debt, the currency of it, the working capital, SG&A, the cash converting cycle. You have to work on it to reduce the cash converting cycle as much as you can. Always to make some kind of the freight, you have to take it into consideration with all these changes. Things tripled their prices in some areas. So it was a big actually work to us in this time, and actually we are working properly. Thank God that the production didn't stop. Our sales is okay. The collection, our cash converting cycle, at least it's as is. The CP reduced a little, but this is very normal in this recession time. So just to close, having or understanding the dynamics and the impact of them over your business and taking the corrective action in a very professional way, definitely it will at least save your neck from any strong damage could happen to you. Otherwise, if you will not do this, I believe other companies in Egypt and outside, they are in a bad position. Thank you.
Well, thank you for those comments. It sounds like Egypt is tough at the moment. I know Yahia has something he'd like to add on that. Yahia?
Definitely. Thank you, Brad. So basically to your question, we have in the last year, we have seen a much higher level of uncertainty. Whereas we used to be able to start budgeting and planning sometime in September to have a final document sometime in December that I can depend on for a full year. Now, the higher level of uncertainty, the volatility of pricing, business conditions, and market situation in general at large is becoming very challenging. So how did that affect? It did affect by one, trying to create more than one scenario, not going with the one static budget for the full year. Two, actually, I'm leaning more now towards having LE's latest estimates, where you have a rolling like 3 months, 6 months of actual, and a new almost revised budget or plan for the rest of the year. Because what we decide in September have nothing to do with what's happening in April at all. So that changed. It changed my planning cycle. It changed the frequency of the update that I need for the plan. And eventually, at the end of the day, it actually, not the planning that it affected only, the measurement of performance. How can you measure performance with such volatility, and compared to what, when the budget becomes in certain cases, in certain segments, irrelevant. So to compare to last year, you compare to best possible, you compare to what. So that's all is becoming very challenging. And again, the approach I've had is having an updated estimate all the time, given the conditions happening in the market, and looking at previous year to try to compare to. I hope that answered what you're asking.
Yes, thank you for that, Yahia. At Douglas Dell Dairy, we've had to do exactly the same thing. As maize prices have changed, what felt like weekly or kind of monthly. So we've done very, very kind of similar things, moving away from that once a year kind of static budget to a rolling budget, rolling forecast thing, which has made us a bit more dynamic, a bit more able to move a bit quicker, which I think everyone needs to adopt. Adeel had something that he'd like to add on that.
Thanks, Brad. Yes. I agree with you entirely that the situation is quite unprecedented. In our business, where we deal mostly with edible oil and fats, somewhere I would say in last year, October, November, we would see our commodity costs the global palm oil in particular rising. The way that we built the budget at that time, we made it very clear to the board that we are focusing on our margins at a certain level. In terms of the actual costs and the actual prices, they would be fluctuating because we are at the end of the day dependent upon the commodities. And then what we saw in Q1, and especially after the Ukraine-Russia war, it was phenomenal. I mean, within a day, the prices shot up like 20–25%. And how we reacted to that, we had to look at first our selling prices, we had to look at our contracts, we had to consider the regulations in the market by the ministry, how far we can go in terms of increasing our pricing. And we had to look at our back-to-back contracts. So we looked at our pricing completely every day for all our products, and accordingly, we, as much as possible, we reprice our contracts. In terms of our working capital management as well, the company had been sitting on a good pile of cash reserves earlier, but due to increase in, let's say, within 6 months, doubling of our input costs, and given our cash cycle of 4 or 5 months, we had to go to the banks to utilize the credit facilities that were lying dormant for some time now, and we had to activate more and more banks to get more facilities at better rates. So I think the main message is that and taking from what Yahia and Sherif are saying, to be aware of what's happening in the market, take proactive actions, be ready with the different solutions, and also communicate with the board exactly what is happening and what actions we are taking, because there can be a lot of apprehensions, that we are not reacting in time properly. These are unprecedented times, and the volatility will continue. We need to be flexible and agile.
Thanks, Mark. How are things happening there at Titan Trust Bank?
Okay. Thank you, Mr. Brad. Taking it from what the other speakers have already mentioned, looking at the environment where we operate down here in Africa, particularly in Nigeria, and as it is happening across the various other parts of the globe, we are all aware that energy cost is rising significantly. Right now, one of the major inputs to powering our business all over the country is the gas, which we call in local parlance diesel. Diesel has risen by over 120% in the past 5 months. And as you know, power generation in the country is very low. We hear that output of the public power supply today is about 9,000 megawatts for 200 million people. So that means that each business has got to provide its own power supply, and we have to rely on gas to do all that. So gas is a huge input to our cost as banks and other businesses in Nigeria. We're also facing inflationary pressure, just like any other part of the world. And then FX, foreign exchange issues, both in terms of supply and in terms of conversion rate. Those are all major factors that affect our planning, our budgeting, and spend management. So as a bank, as an institution, we continue to project all this in our planning. Regular review of projections have become a critical part that we all have to follow as CFOs. Projections of how these cost items move, even on a monthly basis, has become very critical for us to pay attention to. And as a bank, we are also faced with regulatory charges. Regulatory charges are non-discretionary expenses, but then you have to manage your business in a manner that should attract that should make you more efficient when it comes to regulatory charges. So for us as a financial institution, you need to decide between size and efficiency. Some items that drive your regulatory costs are size related, but then how wide or how tiny is your margin? The margin that you're deriving from that huge size of business that you are doing. So in budgeting, the assumption has to be clear. Board has to be clear as to what they are interested in. How much of size and how much of profitability are you interested in? These are the things that would determine how bullish you are in terms of growing your asset size, and then the margin that you will keep, and then to accommodate the costs of doing business. And in budgeting, particularly, we look at the nature of the costs. What is fixed and what is variable? The variable and fixed part of the cost, and what are the drivers of each cost element. So as CFOs, those are the things we need to pay attention to, and which levers to pull in trying to manage that efficiency. So for us at Titan, we are still a new bank, but from the experiences we've gathered from where we're coming, all we do is focusing on efficiency on both sides, both in income generation and spend management. And that too, we define how efficient your business is, and then your cash flow, cash inflow and cash outflow. In spend management and working capital, we are looking at how best to protect, how best to ensure that we are liquid and that we are efficient in both profitability and availability of cash to operate. I will leave it at that for now.
Thank you, Mark. I'm with you. The understanding of fixed costs versus variable cost is critical for any finance team and finance manager over the last couple of years. If you didn't know what was going on with your fixed cost base, you were in big trouble. So thank you for that. The next question that we're going to move to is, can AI and digital analytics be leveraged to build structural efficiencies in working capital management? How prevalent are these technologies in your organizations? Is there anyone on the panel that would like to fire off there?
I'm okay with this. Can I start just in give my please. It's part of my responsibility, the digital transformation and the automation as well of the whole group. In this time, digital transformation is mandatory, actually, and I went through its long journey in my. Actually, our group it's became very strong in the last 5-6 years. And we were born as isolated islands. So everybody was having his own corporate governance, his own policies, procedures, systems, and so on. So in this time, I made lots of very strong consolidation, for example, corporate governance. And all this cannot be done without having a real system to control, to put your budget, to prevent any wrong actions during these things, and also to monitor the performance, which is mandatory in this time. As I said, we are working over 70 countries. So having control over the revenue and the new orders and the backlog without CRM, it's impossible. Controlling the cost and the pricing and the quotation without CPQ, you cannot have a real control over all these things, and to change and to see where are we making profit, loss, and so on, and how's the satisfaction or the new orders from the customers. Monitoring the new countries, if there is any new country or anything, to see the performance of this country. Also checking the cost and through lots of new things. Also, the supply chain. We need a strong smart supply chain system to monitor where are we and all these things because of this delay in the supply chain, and we are paying lots of money to get and the queue in the ports to get your goods or raw material on time. So I consider the digital transformation is my partner to live in these dynamics. Actually, to enhance or to right size even the headcount. Not we shouldn't say always downsize, because I have lots of new investments, new places I'm working, so I move my people from here to here. So lots of things we have done during this journey, but I believe without this, the ERP, of course, and all these things, checking and the performance, the sales, the cost, your expenses, your GP, your margin, and all these things. If you will not do it, you will not be able to live in this life now. Last point, that digital transformation or artificial intelligence, lots of big words. You have to monitor what you need exactly for your organization and for your to enhance your performance. Don't take anything, because there are too many things and very nice in the presentation, and big companies they are selling, but actually you will never be able to have all of these things. Just put priority and what do you want to do, and by how I can do this. This is the most important. Don't always just to say in presentation in a big places, we are digital transformation company, we have CRMs. So it's like, I believe it's just when you have soiree or just for a night to have papillon to show it in front of everybody and nothing inside your company. So make sure what you will buy to be very efficient. Thank you.
Thank you. Thank you. Yes, the right CRM partner and ERP partner is critical for any business going forward. Mark, how does it work there with Trust Bank? I'm sure you've got lots of digital data and AI in there and lots of opportunity. How are you guys dealing with it at Trust Bank, Titan Trust Bank?
Yeah. Yes, thank you. AI analytics, these are critical success factors, if you ask me, in business today. At Titan, we are actually a digital bank, and most of our processes are automated and being automated as we speak. And the benefit of that is actually for ease of monitoring and taking corrective actions. Internal processes that are automated will enable you to monitor efficiency, ensure that cost is clearly identified, and cost drivers, like I said earlier, are also identified. As an institution and as a bank, we are interested in volume to profit ratio, and that will help in planning, and that will also help in monitoring and controlling activities of the business. So particularly, for instance, on the expense side, we have implemented and continue to implement an expense processing process, a workflow, so to speak. And the idea is to be able to capture the necessary details in the system that will enable you analyze costs in the future. So the predictive ability of your analytic system will help you to know how increase in certain areas of cost or age of certain equipment will affect the performance or profitability of your business. So this is our vision, and this is our approach to ensuring that we can keep tab on what drives our costs in the future. And I think I'll leave it there for now.
Thank you, Mark. Yahia, what are you guys doing there to build structural efficiencies in your working capital management?
Well, the thing on my side, I have very different industries. I have, it's a part, I run part of the group of AHA, and I have very, very different industries. So across the board, as we went with our ERP re-implementation and from a digital transformation standpoint, I wanted to make sure that the time to capture the data of an invoice is very minimal and clear to everyone. One. Two, that once that's captured, the very old tricks of just delaying payments and doing this and doing that doesn't really work anymore. The second part is working with major customers on some sort of data interchange or integration where I can quickly get the invoices to them in a format and shape that is easy for them to review and approve and accept, and as such get the payment faster. So working on these small bits and pieces from the invoices coming in a way I can read and process as fast as possible, to giving out the invoices in a way that the customer can receive, accept, verify, and accept as quickly as possible, and as such cut down the process, reduce the process of reconciliation and inquiries and as much as possible. Now, all of that did give a very, very, very favorable impact so far, but I'm a bit of an old schooler. I'd like, again, with all the robotics and everything, to remind everyone that, to me, the very first step of working capital management is an educational process to your operations team in general. You need to understand what you're trying to do. You need to understand how they can help, what can they do, the impact of their actions. Our job as CFOs is, although working capital is a priority for us, but the fact of the matter is you're impacted with a lot from the business that unless you get there, have them see the picture, have them help you work on it, robotics will not do anything for you. It will just make things maybe 1% better versus the educational process you need for the business. That's it for me, Brad. Thank you.
Thank you for that. I'm also on board. We're teaching the people that are in the business with you how their efforts also impact the overall working capital management and profitability of their business is critical. Robots are a tool, but the people make the business work. Adeel, do you have anything to add there?
To that point, that any technological or digitization that we bring into the company should be managed well to fit into our objectives and achieve the desired results, and without engaging the right people, as Yahia is saying, that those efficiencies may not be materialized. So for example, in terms of working capital management, there are solutions that we can bring in, established bots, and they can monitor our receivables, and they can we can automate sending the reminders to our customers, and then sending them statements. But until and unless the actual efforts are done by the collection teams in ensuring that payments are collected on time, and the differences with the customers are resolved in time, the objective of improving the working capital will not be achieved. So it goes hand in hand, having the digitization, but then making sure that the process works properly and people are responsible and they engage to bring the desired results.
Thank you. Thank you. The next item we'd just like to kind of run through is how we're leveraging data and analytics specifically to establish checkpoints and enhance governance and visibility. Now, I'm sure Mark has plenty to add on that from a trust bank, Titan Trust Bank point of view, which governance and visibility is critical in any banking institution. Mark, do you have anything to add there?
Yes, okay. Thank you very much. I will look at this from two perspectives, what I might call a strategic approach and a transactional approach. Now, in terms of strategic approach, I will look at it from, first of all, setting the base objectives, a long-term view of how you want to leverage analytics and data in putting checkpoints and therefore monitoring and controlling the activities within the system. So for me and for us down here, we first of all, you build a technology base that accommodates the kind of data that you want to analyze on an ongoing basis. You create the governance system. For instance, here we have what we call a cost management committee that looks at proposals, looks at vendor selection, looks at terms and negotiates with suppliers of services. And the whole idea is to ensure that there is proper governance and that there's also control in the way contracts are awarded, the way engagements are entered into. And CFO sits at the top of that committee with other departments that also have a duty to ensure there's a strong management control system in the organization. So when you have this governance system, the next thing is, how do you capture data into your system that enables you to analyze how these operations are carried out? Now, the checkpoints will be, what are the benchmarks? What do you want to achieve? That's why I said strategic. Then on a transactional basis is for each engagement, what are the terms? What is the system to ensure that those terms are agreed? There's what we call SLA, service level agreements, that you have with your vendors. We depend so much on vendors because today, businesses, there's a lot of outsourcing, since you have to focus on your key your areas of competence. Banking is our business, but we are not technology people. We only leverage technology. So you have service level agreements that guide the relationship and the service quality that you expect from these vendors. Who has a responsibility to ensure that these are followed? Now, in terms of analytics, how are you monitoring? As a bank, you have lots of branches all over the place. How do you ensure that each of those locations are effectively and efficiently managed in terms of cost? What cost areas are what are the major cost drivers in each geographical area? What analysis, what diagnosis do you do from time to time to ensure that certain movements or trends that you observe are being controlled? So for me, this is the area
there were not
that...
too many questions. Right? So initially they were going to do...
Hello?
Just carry on, Mark. I think her mic's just on by accident.
Okay, so I didn't know what she was saying, but my point is the fact that you need strong governance, and you also need a technology capability that enables you to capture data on an ongoing basis, and you must have the ability to analyze those data to be able to get insights into what drives cost and helps you to manage efficiency. Thank you.
Thank you, Mark. It sounds like you're up to your ears in data there at Titan Trust Bank. But it sounds like you're on top of everything. The next question that we have around impacting working capital management is around zero-based budgeting. Now, at the dairy here, we love zero-based budgeting because it helps us to relook at the business every single year as if nothing has happened prior to that. So I've personally made sure that every single year we wipe that kind of slate clean, and the guy starts as if it was a brand new business. Go out and tender to everything that's up contract renewal, and try and be as efficient and as honest as possible with ourselves to take out the fat and to be as lean and mean as possible. Adeel, what are you seeing there in terms of zero-based budgeting at United Foods? Do you guys do that? Are you a fan or not?
Yeah, definitely, yes.
Okay, Sherif, you can start.
Okay, as I said, it's based on lots of things we are facing these days. We cannot consider the historical data or prior budgets are efficient these days. So having and considering all these dynamics, as we said in the first question, and what's going on the world and inside your company, is very essential, and it's much. If, for example, I was, for example, selling lots of my materials to Russia, and now Russia closed. So how can I consider prior data or old budgets into consideration? So historical data, it doesn't help in this in the situations we are facing now. Zero-based budgeting, it's very important to adjust yourself to consider all the changes, operating costs, expenses, material, commodity shortage, the freight problems. So, and monitoring all these things that change in the gross profit now, it's changing drastically now. While areas we were making very good profit, now we are not, or break even. So it's very important that this zero-based budgeting or business, we have to see the future. You have to be more strategic, more having reading what's going on. So you shouldn't consider the past as will be the history. So this word, it will never happen now. So things what we are facing inside our companies and outside, the cash flow squeeze everywhere, changing the payment terms. So considering another cash flow to help. For my area, considering debt-based, currency-based, different than before. So all these things, I believe it's mandatory. It's not optional. No one tell me I will take the budget of last year plus 10% growth and so on. It will never work like this. So this is how we with the availability of the data, leveraging data, as you said in the last question. So all this artificial intelligence to see, we have what if scenarios. For example, the copper and prices in the cables manufacturing, we have to consider, change the currency, change the raw material prices. All this consider factors. It should be for what if scenarios, and do lots of things from the zero base. Thank you.
Thank you. Adeel, do you have anything to add there from United Foods Company?
So what we do here is basically, I would say, it's a mix. So we start with looking at what are our projections for the next year in terms of population growth, in terms of demand, inflation. For our regular expenses, stable expenses, we use the last year as the yardstick because that's the reality. But then again, in terms of our sales forecasting and then translating that into the margins, definitely we have to look at the channel level, at the SKU level, and build from bottom up. I think the most important aspect in terms of our budget planning is to make sure that we correctly spell out our building blocks on how we will achieve the budget. So what are exactly our assumptions in terms of expansion, new product development, reaching new markets, in terms of growth, and so that when every month end or every quarter end, when we look back, when we analyze, we evaluate those building blocks, the assumptions that we had incorporated in the budget versus where we are today. and then adjust them to project, how we would, how the performance would look after, let's say, 3 months or 6 months down the line. So it's a mix, I would say, of both, and making sure that, the building blocks and the assumptions are correctly spelled out from the beginning and then evaluated.
Great, great. Yahia, what happens there?
Well, actually, I'm more towards Adeel's point of view. I think zero-based budgeting is more of a state of mind, of an approach rather than a fact. Because the fact of the matter is, you do have fixed assets, you do have depreciation, you do have contracts. Some supply contracts run over the year end. So to say I'm going to come and start from a plain white paper is not really the case. It's the fact that we go and do that every year, which is question the basics, start from asking the 5 whys, as we call it, why, to get to understand, can I have better productivity, efficiency, yield of materials, can I do this, can I do that? But that is rather an enhancement process that is neither accepting last year's performance as a benchmark, 100%, nor disregarding history altogether. It's actually somewhere in between. The needle moves a little bit between different organizations towards more of a zero to a full acceptance. But you cannot have an actual zero unless you're, even at a startup, you have capital, you have limits of debt, you have things to consider. So yes, what we do typically in all of our businesses is we stop and say, okay, here is what we've done. Here is from a strategic point where I want to be. What can I do this year differently? And I'm not here to just accept an increment over last year. I'm here to see how business will be done this year. And that's more of an approach that I like to take and have been paying back in different industries so far for me.
Those are great points. Mark, with zero-based budgeting, are you a fan? Are you not? Do you kind of use it there?
Okay. For me, zero-based budgeting is a concept and it's just a way of thinking. Industry characteristics, business, the nature of business is different from one business to another. So I would say that for a bank, for instance, you will always target growth in balance sheet size, customer number, deposits, loan creation. But when you now come to the expense side, there are basic costs that you must accommodate. So while you might have a growth, you might rely on historical numbers in some areas. There are some areas that you have to go back and ask yourself, what are the assumptions? What has changed? What can I change in each of these items in order to arrive at a budget? But it is clearly guided by strategic view that you have about the business. So just like Adeel, Yahia said earlier, it is not, you cannot divulge completely history and then say everything go back with a white plain paper and start afresh. No, there has to be a mix of the two. I subscribe to that position. Thank you.
Thank you for that. So that brings us close to the end of our session today. We only had 45 minutes and we're approaching that quite quickly. Is there anyone that would like to give a nice kind of summary on the topic? Sherif, I see you've got your mic off and ready to talk there. You want to just kind of summarize how you feel on impacting working capital via spend management for the listeners?
Sorry, can you repeat? I couldn't.
Do you just want to give us a nice summary of your views, just for the people in the audience, and then we're going
yeah, sure. Sorry, I couldn't hear you. As we say, we are having a very strong dynamics all over the world. We have to measure it. We have to take into consideration. Don't consider it's small things. No, there are things will impact your numbers. You should be aware of everything. You should work and to have real corporate governance inside your organization to make sure that things are going properly and as per your plan. As a board or big people or C-suite people, executives, they should monitor, take corrective actions if there are anything wrong or something. Don't leave things like this and face problems, and by the end you cry. You shouldn't preventing any bad things as much as you can from happening. For the investors or new investments, I believe it should be slow down a little bit to make sure that things will till we see how things will go. For the gross profit and collecting your cash also, it became mandatory to do some issues to make sure that you will get your in a big project that you will get your cash on time properly. So there are lots of things. Digital transformation is mandatory in your journey during this time to give you very fast response to everything and to show you what if scenarios and so on. Zero budget also is very important, of course, not on everything as everybody said, but it's at least you should know that, for example, your margin will go down. So you should build your things, or your cash management is very important. Cash is mandatory now in this time, especially in the projects and manufacturing companies like me, maybe more important than the P&L in this time. If no oxygen, which is cash, it can bankrupt any organization in no time. So always, all these things, we should be keen to make sure that things are okay, monitor the future and work properly to avoid any disturbance or problems which we can face. Thank you.
Yes, thank you. I'm also on board. Cash is king, and the protection of cash is far more important than profit or EBITDA at the bottom of the income statement. So well done there. Adeel, do you have anything that you'd like to add or kind of summarize for all the listeners today?
Sherif and everybody has been saying, very dynamic situation, quite unprecedented. I think we are well aware of what is happening in the world and how it's impacting each of our businesses. The situation maybe can become more volatile going forward. You have to be ready for the crisis. It's quite unusual. However, we have to see how we can turn these crises into an opportunity for us, because we are now pushed and forced to think out of the box. It's not an option anymore, it's mandatory. So in terms of working capital management, giving as our example from our business, we were not borrowing from the banks. We didn't need to. Now we have to. So there is an interest cost that we are bearing. What do we do? So then we were forced to look towards increasing our interest income, investment into, let's say, bonds and sukuks, which we were never doing. I mean, I'm just using it as an example. So the overall message is how we can create and turn this crisis into an opportunity. And the second most important point I would say for all of us as CFOs, the most important thing is to communicate very clearly to the board, to the shareholders, what we are doing, what is happening, what action we are taking, take their advice and consent as early as possible and align them in advance, so that we can reduce the shocks that are going to come our way, because they will not end.
Thank you. Yahia, do you have anything to add?
Yes, again, it's same point with the uncertainty and volatility we're suffering from. Two things. One, make sure, again, from a business partnering, that everyone knows what's happening. Not just the board, even, or the shareholders, or this or that, your teams at large. You'll be surprised as a CFO with the ideas that will come from non-financial people. because they're not thinking the way we're thinking. He might come up with a very interesting idea. 1. 2, you have to have plan C ready. We're way beyond plan B right now. You have to have C, D, and E for all types of scenarios in terms of cash flow, in terms of collection, in terms of sources of cash for lines and for someone like Sherif, for instance, working in multiple countries, looking at different interest rates and FX exposure in different places, and so on and so forth. But it comes down to, I need to have ready plans so that the moment my chairman walks in and tells me we have a problem here, I have a plan for him. 2, I need different levels of the organization to understand the situation. And believe me, they're going to come up with very interesting ideas. That's it in a nutshell. I don't want to take too much time.
No, thank you. Thank you. That having plan A, B, C, D, and E is something that we've also rolled out here since kind of COVID has happened, and it has proved its worth. So that's very good advice. Mark, any kind of closing comments or summary you'd like to add?
Okay, yeah, so I think a lot has been said. For me, I will just advise that CFOs should be more forward-looking in predicting the turn of events. We are living in a very dynamic and uncertain environment right now. Plan B, C, A, B, C, and D, like the other speakers have said, are important. Collaboration is also important. We have to collaborate with every stakeholder within the organization for perspectives, for support, and for understanding. Everything today is like a change management process. We have to ensure that we get support and conviction from other stakeholders. And again, our job goes beyond spend management. We are targeting efficiency, all-around efficiency. So areas of collections, pricing, yield on assets, cutting regulatory penalties or whatever other losses that are likely to, managing operational losses, let me put it that way. Those are areas that we should also pay attention as CFOs in order to manage cash flow as well as manage profitability of the institutions that we work for. Thank you. Thank you.
Thank you, Mark. I'm just looking to see if there's any questions. There's no questions at the moment, but 𝗬𝗺𝗶𝗴 says, thank you, very insightful session. Zero-based budgeting is always a great starting point, and a budget and forecast is based on a combination of factors, assumptions, and needs to be flexible at a quick turnaround time. So I think she kind of resonates with all of us that it is critical, and it needs to be a mixture of both previous year as just a base, but looking forward and making sure that your business is fit going forward as well. If there's no other questions, I'd just like to say thank you to all of my panelists for coming through. I see we've run over our time a little bit, but hopefully they don't get too cross with us. Thank you for taking all the time out of your busy days to come and help us. Thank you to all of the listeners out there who also did exactly the same thing. So I hope all of you go well and be great business partners for your businesses out there.
Thank you, bro. Thank you.
Thank you, everyone.
Thank you all.
Thank you, guys. Thank you, everyone.
Have a great Wednesday.
Thank you, Brad. Thank
Bye-bye.
you, Yahia, Adeel, Mark. Thank you so much. Thank you for taking our time and joining us today.
Thank you very much.
Thank you. Thanks a lot. Bye.
Bye.